Hello and welcome to Quant Street's daily market review. This update is for the market action ending on April 23rd, 2021. So the major economic update yesterday was that the new home sales surged about 20% month on month in March to a seasonally adjusted annual rate of 1.02 million, up above the consensus estimate of 912,000. March marked the highest annual rate for new home sales since August 2006. There are signs that inventory crunch may finally be starting to ease, and existing home sales figures cooled in March, but new home sales soared, as I said, to a highest level in the last 15 years. The mortgage rates have touched their lowest level in nearly 2 months. The national delinquency rate fell to 5% in March, down from 6% in February. All this shows that despite moderating in the past months, existing home sales remain elevated, well above recent years' pace. Just over 1.2 million existing homes were sold in the first 3 months of 2021. Which is 13.9% more than the first quarter of 2020, before the pandemic arrived. Taking a look at the trend in the housing market, so Zillow's index is at 276,000, and it's forecasted to continue rising given the trend over the years. So that's the major economic update. Let's take a look at how the market performed over a macro level. So here we have TLT, gold, 10-year treasury, Russell, Nasdaq, oil. So Russell gained 1.6%, Nasdaq gained 1.5%, SPX gained 1.16%, US oil was up, TNX, or the US 10-year, was up as well, although it has come down since the market close to a level of 1.558. At the close it was 1.568, so it's gone down by 0.01%. TLT went up slightly, gold declined slightly. In the highly volatile assets, so we have Tesla at 0.78%, Bitcoin and Ethereum both were down and have been down, and VIX was down at -10%. So overall, equities did well, and bonds went down. Moving on, I think this was spurred by the Goldman Sachs estimate of the estimated tax rate that would be finalized once the negotiations are done, and they said that it won't have a big impact on the economy, or not, the taxes won't be as high as expected. Let's take a very quick look at the market matrix. So here we have the cryptos on top. So everything has been declining since this month. Pretty strong decline for Bitcoin, not so much, exactly almost opposite in case of Ethereum and the other currencies like Litecoin and Ripple. There was news about Saudi Arabia banning Bitcoin, so that's why it's been struggling at around this level of 50,000. Equities were up, Russell the most. Year to date, Russell is up most by 16.75%, and Wilshire 5000 is up by 13%. That reflects the reflation trade and the cyclical stocks rising more than say Nasdaq, although Nasdaq is pretty close to Wilshire, but hands down Russell is ahead of Nasdaq, S&P, Dow Jones and Nasdaq. Looking at some of the sectors for yesterday, I think retailers did well, and so did airlines, and they have been doing well this year. Consumer staples not so much, and the only decliners in addition to utilities. Looking at the commodities, overall commodities are up 20%, which betters the stock returns, different indices. Although silver and gold have been down, but oil, corn, cannabis and all the metal stocks have been up, led by tin and more recently palladium. The decliners in this quarter, the major decliner is cannabis, and corn is the major gainer. For yesterday, platinum was amongst the best in commodities. As I said, the bonds were down, and the 10-year gained and went up to 1.56%. Amongst the FANG stocks, Google has done well this year, and so it did yesterday. Netflix this quarter, because of the earnings reports, gone down like crazy, and Tesla has been going up. In terms of international markets, Euronext is down, or you can say flat, and overall there is nothing exciting going on except China, Taiwan, and yeah, that's it. And finally the industries, so banks, semiconductors, airlines, and look at this, commodities, GNX is high. Broker dealers, disk drives hardware up the most. And so it's again a mixed bag in terms of sectors and industries, but overall I'd say it's a good time for commodities and the small cap value stocks, as reflected in Russell 2000. Let's take a quick look at the trend over the last 1 month. So Ethereum has been up by 43%, whereas Bitcoin is almost flat. The stock indices are up by 4 to 8% in case of Nasdaq. Tech is the leader, energy is the lagger, and everything else lies in between 10 and -3%. Palladium has been doing well last 30 days. Gold is positive, but amongst the commodities it's the least in terms of gain. We've already discussed the bonds. So TLT has been up 2% last 30 days. And here's a comparison of the FANG stocks. So Google, Microsoft, Apple, Amazon are all up at around 10%, Facebook at 8%, and Netflix almost flat. So I think with that I'll conclude this edition of Market Summary from Quant Street. I'd like to say thanks to all of you for tuning in. Appreciate your time and look forward to sharing more insights in the coming videos. Quant Street signing off. The preceding content was informational only and based on information available when created. It's not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and may not be suitable to you.